We have looked at the real estate market, both pre-pandemic, pandemic, and now from the data reviewed, we can see notable shifts in the marketplace, from a balanced market to a strong seller's market, and now trending back to a more balanced market. What does this mean for the consumer, the buyer, the seller? This is a time of transition, a time of transfer of power, and with that comes confusion and the learning of new rules of engagement. One party, usually the one in the advantageous position, tends to learn quickly, while the other party tends to take a little longer to adjust. Sellers have come from a very strong seller's market where they experience lots of showings, multiple offers, rapid price increases, no contingencies, meaning firm offers, and on their terms. The new market means that sellers' expectations will need to adjust. Their demands will need to decrease, conditions will return, and negotiations will once again become the norm. During this shift to a more balanced market, many buyers will have already left or will be leaving due to a number of factors, including burnout of submitting offer after offer only to be rejected, higher interest rates which will reduce the qualification factor and affordability levels of buyers, and lower stock market numbers which will result in lower access to funds and down payments from those using stock market gains to fund their home purchases. Interest rates, as we examined, were historically low these past 2 years, and they are unlikely to return to those pandemic low levels. Prices will not be free falling as there is still demand, although now hedging towards a more balanced market level. And there is still fundamentally a shortage of homes that are available. We are also expecting some 400,000 new immigrants to Canada, many of whom will seek the Greater Toronto Area for settlement, thus increasing that demand for housing. Even if governments were to ease the bureaucracy of building legislation and getting permits, even if builders were to ramp up their developments, there still would be a lag time to fulfill the current demand. Stocks will unlikely return to previous highs overnight. The result of all of these factors, sellers are not getting their previous prices, and the shift in the market is apparent. This leaves an arena of opportunity for buyers. Factor in timing. We are entering the early summer months. Many are concentrating on the end of school year, graduations, enjoying the warmer weather, and vacations, especially for the next few weeks. And this provides that window of opportunity for the savvy buyer. With less people actively looking during this period, buyers will have more selection and the opportunity to negotiate, something that buyers have been wanting for some time now. So a shout out to all those serious buyers out there to take advantage of this window of opportunity of still comparatively low interest rates, more selection, more negotiating room, and a softening of prices from that which we saw early January and February of this year. Sellers. While interest rates may take some buyers out of the pool, and as buyers see that softening in the market and less pressure to buy, they may adopt a wait-and-see attitude. Some will opt out entirely. Some will wait to see if prices continue to drop, forgetting that any drop in price will be offset by the looming increase in interest rates, which is pretty much a definite. Some may stay in the market, searching for those desperate sellers. All in all, we will see a return to a balanced market. Here are some tips for both buyers and sellers in this new world. Sellers, you need to be aware of market data globally, nationally, and more importantly, within your specific community and your specific house type, as all of these elements factor into market price and demand. Sellers, you also need to look beyond the past markets and focus on the now. To successfully sell your home, you will need to ensure that your home is prepped, priced, and promoted. Long gone are the days when you just put your home on the market in any condition and at any price and wait for the market to catch up. Price is now key. Don't price higher than the recent sales, as prices are trending lower and as competition is increasing. Don't follow the market, lead the market, and do it quickly. As prices shift lower and more homes enter the marketplace, as sellers try to cash out, buyers will have more choice. Sellers, you may also want to consider selling first before buying your next home. With the increased pool of properties, the pressure of being able to find a home has waned, and that challenge of a strong seller's market has eased. It is now taking longer to sell, so you may want to consider selling first, then purchasing. In terms of price, don't anticipate to match previous sale prices or comparables, especially from earlier this year during the height of the market. The situation has changed. Just as in a seller's market, price is determined by demand. With increased inventory, homes will be on the market longer, and the demand for any specific property may be lower. Sellers must consider all offers on the table, as there is no guarantee of a future offer or of an offer at a higher price. So be open to negotiations. Price realistically, don't price higher than the recent comparables, price tight, and maximize your home's potential. Now buyers, this is a time to really reflect on why you want to move, and as always, get pre-approved. Once you have determined what you want and why, and in what price range, start looking. There will now be choice and options. This is not a time to lowball. Take into consideration that homes for the most part are no longer holding offers, which means the price you see is a more realistic price. And if priced correctly, the price on the home will be competitive. And as always, as in any market, the best price and the best home will sell first and for more. So take that into consideration when placing your offer. This is an opportune time to negotiate and ask for some of your contingencies, such as condition on financing or inspection or closing date. The balanced market that we are experiencing is a good thing. It is a win-win for both parties. So take into consideration these changes and adjust accordingly. If you have any questions on the market or specifically the market within your particular neighborhood, feel free to reach out. You can schedule a call with us on the Calendly link below. Any questions that you may have, we are here to help.